In today's video, we are going to discuss the 2021 stock market crash. Will it happen? Should you be afraid of a market crash? Will this be the great reset which has been predicted by many? And what should you do in general? This is Might As Well Invest, becoming smart money. On a side note, only a small portion of you that watch my videos are actually subscribed or smash the like button. So if you end up liking this video or even finding it helpful, consider doing both of these, as they are free and you can change your mind at any time. Now enjoy the video. Alright, although it is the unreasonable thing to do from a content creator standpoint, I'm going to provide you with my opinion right at the start, since I really don't want to stretch this out like some others do. If you want to stay around for my reasoning why I think so and what options you have with your money, feel free to do so and watch the rest of the video. Therefore, right away, do I know when the stock market is going to crash? No, I sadly don't have a crystal ball that can predict the future. And the investors that have been talking about the Great Reset in the year of 2021 probably also don't have one. Otherwise, I'd be happy to get an invite to your home and look into the future myself. So, do I think the stock market is going to crash? No. Although there are some issues from an economical perspective that are going to follow us for probably the next few years, I sincerely don't think so, and even if the stock market takes a hit, I would actually be quite happy about it. But why exactly do I think so, and why would I even be happy to see my portfolio crash? First of all, I'm a huge advocate of the saying, time in the market beats timing the market. This thesis is actually underlined by a study which was conducted by Fidelity. Here they calculated the return of an investment in the S&P 500 you would have gotten over a 30-year period, depending on whether you tried timing the market or just went with the classic buy and hold strategy. This study found that missing just the 5 best trading days of the S&P 500 would have reduced your return by almost $250,000. Since you and I don't really know when exactly these trading days will be, I would not pull out my money off the market. Since first of all, tomorrow could have the craziest returns you will ever see and the crash could possibly never come. But also that if there is a reason as significant to get me to sell all my stocks like the end of the world, I sincerely think that I would have bigger problems than my stock market holdings. To this I then almost instantly have to add some sort of self-criticism. And that is that YouTube creators or public finance figures in general, of which I'm also somewhat a part, add to the trend of creating fear among investors with thumbnails or titles like this. They surely don't have ill intentions with these videos or content in general. I actually look up to a lot of them, and I'm pretty sure all they want to do is educate people with their content. However, I think these kind of videos can be quite dangerous for many investors that don't quite know how to manage their portfolio yet. But I also see a lot of issues with the kind of doomsday promotion in general. Sure, they might have called one recession or a downturn in the past, but to be quite frank, if I predict the downturn of a market 20 times, chances would be fairly high that I would at least be accurate one time. From an investor standpoint, I'd however rather be a part of the other 19 times. With this statement, I largely mean that you should not blindly listen to someone giving you financial advice on Twitter, just because he called a recession once in the past. Take in their opinion, but always do your own research, and it might be quite useful to not only use YouTube as a resource for that one. But obviously, I also have to say that the crash is always possible and can basically come at any time. However, I think this is nothing to be worried or afraid about. And for that, we obviously have another saying, which you might already know. This one comes from Warren Buffett and goes, "Be fearful when others are greedy, and greedy when others are fearful." This, in my opinion, perfectly highlights why you should look forward to a market drop, as you can pick up stocks at pretty much dirt cheap prices, which is also exactly what I did earlier this year. Sure, I know how easy it is to say, buy more when the markets are down, and I fully understand that some people feel the need to sell their holdings when the markets turn red. However, I find that to be also the best thing about the stock market. You don't need to be smart or a genius to make money in the stock market. As long as you have the stomach to hold your stocks that still fit the story you bought them for, you will most likely succeed in the long run. This is also pretty much the case we are often presented by the most successful investors of our time. Do you think Peter Lynch or Warren Buffett never sold a stock during a market downturn? No, obviously they did. Warren Buffett dumped almost every airline holding he had earlier this year, losing billions in the process. However, at the same time, he also used the cash proceeds from these sales to buy new holdings or strengthen existing ones. And trust me, I think I can gladly vouch that we all can learn a thing or two from how Warren Buffett or Peter Lynch invest. Therefore, I will also put some extra resources in the video description with books and videos from these two that I personally found extremely helpful and I learned a lot from. Now, let's get to the promised part of this video, which is probably also fairly interesting, especially for the new investors among you. What should you consider doing with your money to even be safe if a crash comes, and what am I currently doing with my money? I, however, have to say that I'm not a financial advisor. I'm basically just giving my opinion, and for real investment advice, please always consult a real financial advisor. First of all, owning quality companies in 2021 will be as important as it never has been. This is simply due to the fact that the market is reaching new peak levels almost every day, and finding value investment opportunities gets harder and harder. This, in my opinion, also includes building a story around your investment so that you know when to sell a holding. And I repeat, you should only sell a holding if the story does not check out anymore, not because the market value of your investment is falling. In addition to that, diversifying your portfolio to some extent or even picking up some ETFs is always a decent option. Some investors might even consider bonds a great option for a situation like this. However, I'm not a huge fan of them, for which reason I personally would stay away from bonds. If you want me to do a video on why I think so, feel free to comment that down below. But it must be said that these can lower your risk significantly, but also give you some peace of mind. And if you are still looking to reduce your risk even further, you can obviously also spread your investments throughout different asset types. To a large extent, that is also what I'm currently doing, and what I've been doing for the past year. That means I'm regularly funding my portfolio, but I'm also taking a look into growth-oriented stocks. That's only my personal preference though. At the same time, I'm also building a cash position so that in the case of a market crash, I can drop that into the market and buy stocks at dirt cheap prices. However, I also have to confess that my investment portfolio does not only consist out of stocks, so there's also some funding going into these other investments. Alright, so this was my short take on the by many investors promised collapse of the stock market in 2021. I hope I was able to help you out a little bit in forming your own opinion on the promised crash. Remember, this was Might As Well Invest. If there are any topics you want me to talk about, feel free to contact me down below. And I'll see you in the next one.